Lots of movement in the portfolio this week. Two positions were closed and their profits are now locked in. Last week, I said I was looking out for opportunities in Clorox and Starbucks after earnings, and they both delivered. In total, I opened 4 new positions this week. Let's start with the closed positions. First up, we have Best Buy. The 18 Feb $90 put was sold for $1.28 and closed for 60 cents this week for a total profit of $68. Remember, one contract is the equivalent of 100 shares, so we have to multiply the value by 100. If you watched last week's portfolio review, this is exactly what I was aiming for because we get 50% of the max profit and we're out of the position before earnings. I'm absolutely not done with Best Buy yet, but I'll wait for their earnings announcement on the 3rd of March before starting a new position. The other position that was closed for a profit was my covered strangle in Walgreens. I sold the 47.50 put and the 57.50 call for a total of $1.15 and bought it back for 40 cents for a total profit of $75. When you consider that Walgreens pays a dividend of 48 cents a quarter, this trade alone is the equivalent of getting paid a dividend on 156 shares of Walgreens. And that's the power of selling covered options against stocks in your portfolio. You get to enhance the returns from the stock as well as the dividends. In total, that's $143 in profit locked in for the week. Nothing earth-shattering, but still very welcome given the volatile environment we are in. If you find watching these portfolio reviews helpful, please click the like button and consider subscribing to the channel. It really helps me out. Thank you. Now, let's go through the rest of the positions in the portfolio. Starting off with Clorox, this was the huge surprise of the week. The stock basically fell off a cliff down nearly $25 or 15% to close at $141. I sold a March 18 $135 put for $1.80. That's currently down $65 already. I already own 100 shares of Clorox at $170, so getting in at $135 would be a great opportunity to lower my cost basis. With 41 days to go, we leave this position and see what happens over the next couple of weeks. Dick's Sporting Goods is an existing position with a put ratio spread. There's only $6 left in this trade with 13 days to go. But I'm going to leave this trade on just in case we get a nice down move, which may make the embedded put spread here from $100 to $95 profitable. J&J is also an existing position as part of Project Booster. We've sold a total of $453 of premium and only $68 is left outstanding. If we get a chance next week to buy back this position for maybe 50 cents and re-establish a new position for more than $1, I'll consider doing that to collect more premium. Realty Income is currently trading at a $12 loss, even though the current price of $68.19 is above our strike price of $67.50. We still have some time in this trade with 13 days to go. I'm leaving this on for another week and do have an order in to close the position for 35 cents if we get a bit of a lift next week. Here's a new position in Starbucks. They reported earnings this week and talked about how higher prices and supply chain issues were going to be persistent issues, but I think they'll be alright in the longer term. I sold a $90 put expiring on March 18th for $1.66. That's currently trading for $1.77, but we're very early in this trade with 41 days to go, so we'll just leave it and revisit it at a later date. SCHD has a $74 put expiring on March 18th that was sold for 90 cents and is already trading nearly half of that at 52 cents. There's actually a lot of time left in this trade with 41 days to go, but I've entered a closing order of 20 cents. If that order gets hit in the next 2 weeks, we'll take it and move on. But if it doesn't, I'll consider leaving it until expiration to see what happens. Basically, if I can get 75% of profit early, I'm happy to lock that in. But if not, I'll have to re-evaluate what to do depending on where the stock price is at the time. TXN is another new trade this week. I'm entering this a little more cautiously with a put ratio spread, buying 160 put and selling 255 puts for a $1.29 credit. At $171, TXN has dropped $11 before I consider doing anything to this trade, so we'll leave it and wait and see. Finally, Walgreens, we already talked about closing the earlier position for a profit, but Walgreens considered to slide slowly this week, which led me to sell a $45 put expiring on March 18th for 77 cents. If we get a bounce in Walgreens over the next couple of weeks, I'm going to sell a call to set up a covered strangle and then look to close both legs for about 50% of max profit. Exactly the same strategy that I talked about at the beginning of the video. Looking ahead to next week, my priority is going to be either closing out or rolling those positions that are getting close to their expiry dates, mainly Johnson & Johnson and Realty Income. Earnings season is winding down, but both Coca-Cola and Pepsi have their earnings coming up. Between the two, I do prefer Pepsi for its more diversified offerings, so I'll be looking to trade any weakness post-earnings. Thanks for watching this portfolio review. I'm glad there were new trades to go through this week. I'm still putting together a video with all my options earnings in January. Hopefully that'll be ready next week. But until then, take care and invest safely.